Okay, I think it's time for us to take a quick little peek-see at a little guy known as Chegg, right? This thing was up 6% during the normal trading session, rather volatile after hours after reporting earnings. Really one of the hottest stocks you can see in the market right now because, well, it's a very current environment beneficiary, I should say, if that's the term I'd like to coin. A company that very much benefits from, school from home as opposed to in class. Chegg benefits quite a bit because they offer a lot of services for this. So let's look at these earnings and see what's going on. So, Chegg has a quarter two non-GAAP EPS of 37 cents, which is a beat by 5 cents. Pretty nice. And a GAAP EPS of 8 cents beats by 3 cents. So, profitability is nice. I do like profitability. I don't know about you, but I do like profitability. And it makes me happy for this company. It shows progress from unprofitable to a company gaining some profit now. We'd like to see it. Revenue is up 63% year over year, though. 63% growth, beats by 16 million. That's pretty nice. So, overall, looks like a pretty big smasher there. Adjusted EBITDA came above consensus too. And just normal EBITDA as is fell a little bit short of consensus, but overall looking good. Now, there wasn't a detailed news article for me, so we're just going to go right into the slides if you are okay with that. I know I'm okay with that. And obviously, we're starting off with a little bit of the intro slide. It's a smarter way to student. So, getting into these slides, we skip over. Come on now, get that out of here. So, again, this is the leading direct-to-student learning platform to improve outcomes, focused on a lot of tutoring as well as the offering of books as well. It's a company that does a lot for students and really benefits from the students that aren't able to go to class right now because they definitely really need help with tutoring. A lot of people do. I did tutoring myself. I tutored. I did not receive tutoring, but I did tutoring, and trust me, there's some people that really it gets them a lot better than learning just from lecture, or especially if you're online, you need someone to help you along the way, for sure. So, yeah, there is that. Sorry, we're dealing with a little business, but now we're done dealing with business. So as far as the highlights, we see that this is a very large addressable market with compelling market trends. There's no doubt. This addressable market is massive. The amount of people they can reach, very big. It's a high growth and high margin model. Very high margin potential here. Very high margin potential here. And growth could be massive too, as you see a 63% growth there. And a competitive moat, given the brand reach, data, and proprietary content. Them being really one of the top, the leader in what they do, they likely will stay on top. I doubt any other company will take over what they're doing. So there's 3.9 million Chegg Service subscribers, which is a 29% year-over-year growth. I expected slightly higher than this, okay? Not at all bad. I mean, it's very good growth there, and I expect the number to continue to rise as the fall semester kicks in. I think since a lot of people won't be going to physical classes, they'll be using Chegg Services for tutoring. And around 15 million Chegg platform unique visitors in an average month. It's a lot of people. And 31% growth in Chegg Services, 30% adjusted EBIT margin, and voted Fortune's best small and medium workplaces, workplaces in technology, workplaces for parents. Okay, don't know why it's good for parents, but it is. 3.7 million Chegg Services subscribers is up 67% year over year. That's what I was talking about. Mathaway added 9% of that growth. So people, obviously math is a big portion that people need tutoring on, especially if you're not getting lecture with math. some people just don't grasp math that well. They don't. Lucky for me, math is definitely my good subject. It is my best subject because I'm a numbers nerd, as you may have noticed. But yeah, absolutely, it's good to see that. Total revenue up 63% and 375 million Chegg study content views. Pretty nice. That's a lot of people on that platform. So, average age of students is 25 for people using this. Average around 40% are employed. I currently work and go to school online as well, so trust me, it can be tough sometimes when I work 60-hour weeks, but we just make it work, okay? 37% don't graduate, and 30,000 was debt. Debt was owned by 2018 graduates. 30,000 debt owed. Definitely, obviously, numbers they're high. A lot of student debt out there, but that's why we need people to pass their college instead of gain that debt and just end up dropping out. That's what sucks. And 41% of recent graduates are underemployed. So, again, so you need to be prepared for work, not only just your education, but you need to have the skills for the trade, and if your education isn't helping you do that, then, that sucks. So 36 million U.S. university and high school students, so that's availability as far as what their addressable market is, or what their current market opportunity, and the total addressable market, they have the potential of 48 million English language instruction as medium, tertiary students outside. So 102 million total students can benefit from Chegg, is what they're saying, and they've only got 3.9 million subscribers. So they are telling me that they can grow their platform 30 times the multiple there. I mean, that's a little bit ridiculous. Sorry, 25 times. How about that? Does that make you feel better? I hope it does, because that sounds accurate to me. So, Chegg aims to provide overwhelming value for the price, obviously. Everything online, on demand, personalized to your style, adaptive for whatever you need. It's affordable and backed by human help, so you have people there that can help you. Then that's what people need. They need human help, not just computer help, for sure. And it's good that they offer that. So as far as the people who know about Chegg, the name, and this is why I say it's got such a good moat, obviously. Percent of college awareness, this has unaided, people who have obviously not been prompted about it. 37% are aware of it, and 87% of college students have heard of a Chegg service. So apparently more people know about Chegg than they know about Amazon as far as college students are concerned. Percent unaided, I don't know, more than Google. I mean, something seems a little weird to me, but I mean, what can I say? And what a shocker. Primary field for Chegg Services is STEM, science, technology. We're not shocked about that in math, obviously, because those are the core subjects that a lot of people need help with. More of your specific degree focused, like business, which I don't know why anyone would need tutoring for that. I'm sorry, I'm getting a business degree, and I don't know why anyone would need tutoring for that. I could pretty much do my work with my eyes closed. But and then finally, you have humanities, social studies, and other. Again, don't know why people need help for those. I don't get that one, but I get it. Maybe they just want some free answers. So overall, it's an integrated platform of connected services. You got Chegg Study, Chegg Writing, Chegg Math Solver, which shows you how to solve math problems, and Chegg Tutors, who are actual people who can help you. But Chegg Writing, obviously, for specifically checking your grammar as well as any sort of plagiarism. And Chegg Study focused on studying. What a shocker. And for skills, they offer Thinkful, which is helpful for people who are trying to get actual skills in the field they're interested in. So as opposed to just, getting education, they get skills as well. That's the main focus. And they offer textbooks as well. You can render by textbooks, which is probably the main service that a lot of people have heard about Chegg for. Not only do they know that, but they know what they provide. So Chegg is delivering strong outcomes. 92% Chegg study helps me graduate better. 92% say that. And 90% say Chegg helps me understand my homework better, or my schoolwork. And 85% Thinkful placement rate. People who get or that use Thinkful, currently 85% of them get jobs. It's interesting to see that, where they get that data from. As far as services revenue, you see the subscribers growing just massively here. And as far as the services, fiscal year 20 expected $495 million there expected. Would be a massive growth year over year. And it's good to see that number for sure. It's very good to see that number. I don't know if this has a balance sheet on it, and I didn't come prepared this time. I can't lie to you. Just kidding, I did. Clearly I came prepared. See, it was already in my search bar. I came very prepared, and you are going to look at this balance sheet, and I'm going to look at this balance sheet, and you're going to be okay with it. So, as far as the assets are concerned, total current assets on this company of $742 million. Okay, we had to look at that just to be sure. $742 million versus $807 last year. $807 million. Total assets in general though did rise, so you see there's a bit of an improvement as far as their textbooks, property, as well as goodwill. So overall total assets is $1.5 billion versus $1.48 billion. So there is improvement there as far as that's concerned by around $50 million. So good to see a balance sheet improve. The question is, does liability improve as well? Unfortunately, we don't see that here. So current liability also increased by around $50 million. So stockholder equity was pretty much unchanged, $1.04 billion versus $990 million of 6 months ago. So the balance sheet's not beautiful. Stockholder equity of $498 million versus $498 million of last year. Equity technically fell a little bit, but overall, I'd call it pretty flat. So overall, the balance sheet's not as good as it could be. I would like to expect a little bit better for them, but I can't say that it's bad. I can't say that it's bad. Everything's going all right for this company, and the future's pretty bright for them. I can't lie to you. The future's bright. Stock's valued pretty darn high at $10 billion. When you're only expected $490 million this year, it's priced high, and that's why I don't like it at these levels. And I get if you were to buy it at these levels. I just don't personally like them at these levels. I prefer them closer, frankly, to the 50s, which is unreasonable to ask for, but I prefer fair value. But, that's what I got for you, and I do hope you certainly enjoy this. Have a good one.